Be Wealthy and Smart, episode 1520.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we'll talk about how consumer sentiment has risen for the first time this year. Now, this is a big deal because we've had so much to deal with economically. First, at the beginning of the year, we had a dramatically rising stock market after the election, but then we had the tariffs, which took the market steeply lower, and then we had a recovery from the tariffs that brought us back to where we were before the tariffs started. So we've been all over the map, and with all that volatility this year, the S&P has managed to eke out a 3.03% gain year to date. The NASDAQ is up 1.99%, and the Dow Jones Industrial Average is up 0.55%. What's really benefited this year are the precious metals, with silver up 24.67 year to date, and gold up 29.36% year to date. But it's the mining stocks that have been the really strong standout winners, with the junior silver miners up 50.76% year to date, the large gold miners up 58.3% year to date, and the junior gold miners up a whopping 63.74% year to date. So we've been very grateful to have those in our portfolio and have them up over 50% through half of the year. It just goes to show you what a lot of money printing will do, along with uncertainty and war thrown into the mix. Not to mention heavy shorts on gold and silver as well. So let's talk about consumer sentiment and why this is so important. First of all, it's a big deal that consumer sentiment increased for the first time in 6 months in June. Inflation has been around the same, so we haven't had a dramatic rise or dip in inflation. Really, a lot of it has been the narrative about the tariffs, and that has been very destabilizing to markets, at least in the short term. The University of Michigan has the Consumer Sentiment Index, which was released on Friday, and it jumped 16% from 52.2 to 60.5. This increase follows the drop that last month was the second lowest level in the nearly 75-year history of the survey. And consumer sentiment is still down 20% compared with December of last year. Now, consumer sentiment is really important because 2/3 of the economy is based on the consumer. And if the consumer isn't feeling positive about the future, then they don't want to make long-term or big-ticket investments. Conversely, when they have a lot of confidence that they'll have a job and they'll have income and that the future looks bright, they're more likely to be confident and make those purchases and keep the economy going. So it's an important indicator that we follow. Joanne Su, director of the survey, said consumers appear to have settled somewhat from the shock of the extremely high tariffs announced in April and the policy volatility seen in the weeks that followed. However, consumers still perceive wide-range downside risks to the economy. Yeah, and the news about the tariffs and other economic news led to 5 straight declines in consumer sentiment. So this is a big shift that we see this move in June back to more confidence, and that's a positive signal for the economy ahead. As far as inflation goes, prices rose just 2.4% in May compared with a year ago, up slightly from 2.3% in April. We know that we have a Federal Reserve meeting this Wednesday, and the Fed is expected to keep short-term interest rates unchanged at about 4.3%. So talking about inflation, grocery prices rose 0.3% from April to May and are up 2.2%. Fruits and vegetables, breakfast cereals, and frozen foods all rose in price. Egg costs fell 2.7%, their second straight drop, though they are still more than 40% more expensive than a year ago. So we'll see what happens with this Fed meeting and what they say. Sometimes what they say is more important than what they do because they're indicating what they're going to do about future moves. But right now, inflation remains stubbornly above the Fed's 2% inflation target, which makes it less likely that the central bank will cut its key short-term interest rate at this time. However, I do foresee that interest rates will be lower by the end of the year, and so I'm still maintaining my positive outlook on rates later on this year. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.